Our next guest is feeling bullish about crude. Here to talk about oil and other commodities, Bill O'Neill. He's a partner at Logic Advisors. John Adam back with me. Okay, Bill. So OPEC staying pat. Does that mean though that we're going to see a slowly creeping higher oil?
Well, OPEC staying pat is no real surprise, but what we're seeing is every week little increases in production. The IEA ups it by 70,000 barrels a day, and a gradual improvement, and it's coming from around the world. It's not just a U.S. situation. We look at China, we look at places like Vietnam. If you've been over there, it's incredible, the growth, and I think global growth is going to continue on, and it's not just oil, it's commodities in general, and that's why I have such a bullish overall view for industrial commodities.
So it's demand out of Asia, in other words.
Demand out of Asia, demand from India. We have more cars being produced in India, more cars being produced in China. So the demand for fuels is just going to continue to grow and grow from these nations. And then we'll see improvement, hopefully, here in the U.S. and in Europe in the economies, and demand will pick up there.
It's really the emerging nations that are propping things up right now.
Yes, yes.
But Bill, a lot of people talk, oil bulls will talk about the economic recovery around the globe. But if OPEC decided to just boost production, that would probably remind us of how important OPEC is to the oil story outside of this whole story about an improving economy.
That's a very interesting comment, because OPEC is cheating. OPEC is not holding to their quotas by any means, and despite that,
I mean, they're exceeding them slightly, right?
Okay. Slightly, or a little more than slightly, maybe. That has not halted the rally. That has not prevented the market from going higher. So we've been able to absorb that. And again, though, OPEC has always done this, and they're likely to continue doing it.
If they weren't cheating, essentially cheating like this, how much higher would oil be?
It's hard to say, but you could probably throw another $3 or $4 onto the market.
So not a whole lot.
No.
The oil market right now, though, the oil price, I mean, it's been a lot less volatile than you saw, let's say, in the last 12 months or so, or 18 months, really. Is that what we're going to see, the conditions in this market?
I don't think so. We've been pretty quiet from the geopolitical standpoint. We haven't had much there. So I don't think this period, we have quiet and low volume in a lot of markets, even in the equity markets. I don't think that's going to be the overall pattern. In fact, I think commodities in general will be very volatile within this uptrend.
Because?
Simply because of the fact that we have all these participants. We have the speculative element as well as the trade element. We're going to see lots of ins and outs in markets. The technicians will be in there. So I think that's going to keep things very volatile. That's why you have to step back and use things like long-dated option strategies so you don't get caught up in all the volatility and you have to get out of your position.
Okay, Bill, thanks so much. Bill O'Neill of Logic Advisors talking about oil.